So, hi everybody, this is Hustle Hub. I'm Giacomo, and today we're covering PayPal. This is one of the stocks that you asked me to analyze. So, before we get into the video, make sure to like, subscribe, and comment. In the comments, tell me which stocks you want me to analyze next, and I'll put them on my list and I'll do them as soon as possible. If you're interested in the databases that I use for this analysis, I'll put the links in the description, so make sure to check them out as well. So let's head into the analysis. First of all, we see what Wall Street thinks of PayPal in this particular moment. So 84% of analysts right now recommend a buy, 13% a hold, and 2.1% a sell. So we can see the latest reports that came out. We can see maybe some of the pattern in price targets in the last year or so. It's more indicative of where PayPal is right now. So we see the last ones came out a few months ago. So we see that they have slightly increased the price targets, some of them. So that's a pretty interesting thing to see in this particular moment where everybody's talking about an economic slowdown. One interesting thing of the business model where PayPal operates is that is the payment system. It can be an edge on inflation because PayPal makes money off fees of the transactions that are made on its platform. So if the payments increase, also the fees should increase. So that's a very interesting thing to see in this particular moment in time. So let's rank the analysts based on their past performance. So we can see some of the best ones were from Jefferies, KeyBank, and so on. The last recommendations were made a few months ago. So let's see, Jefferies. So here's the last recommendation from Jefferies. We can see that the price target has already been met one time, but then the price of the stock went slightly lower. So that's a good thing that the price target was met once. Then we can see KeyBank. KeyBank more or less on the same pattern. We can see that earlier this year they have put an overweight on PayPal that hasn't been met yet. So we'll see if they change the price target or they stick to it. Let's see why they have put that price target earlier this year. We can see that it has changed from 110 to 115. Keeps an overweight rating. Let's see the last one. Let's see Wells Fargo. Where is it? Here it is. So we can see that Wells Fargo changed the target from overweight at $97 to overweight at $123. So that's pretty interesting. So Wall Street is more positive on PayPal compared to other stocks in this particular moment. So we can see the latest ones from Morgan Stanley, Mizuho. So we can see Morgan Stanley more positive than others on PayPal. Let's see why they had this price target earlier this year. So we can see Morgan Stanley analyst James Fawcett lowered the price target to 129 on a reduction of 8% of e-commerce growth in 2022 from 12% due to growing macro weakness and sector-specific negative signals. Next, let's take a look at some of the fundamentals of PayPal. It has a market cap of $88 billion, income $2 billion, sales $26 billion, price earning pretty high, but probably analysts are buying into it because they see an edge and they see a very solid business, not just an edge. So we can see some of the news. We can see PayPal stock is down, but Wall Street likes the long-term view and so on. So we can see that despite the current macroeconomic situation, analysts are still very positive. So let's see what PayPal has done in the last 10 years, and maybe we can get an understanding of what it can do in the coming years. We can see that the revenue has gone steadily up. EBITDA growth very positive. The debt has gone up as well, but totally manageable right now for PayPal. Easier way and cheaper way to finance the company. Market cap has gone up. We can see that for the first years we don't have the data because PayPal was trading together with eBay, but then the spin-off happened in 2015. So we have the market data from there. We can see the enterprise value to EBITDA that has gone up, and then more recently it has gone down. And then we see the shares, they have diluted some of the shares, so that's not a great thing for investors, but the market return has more than justified the dilution in the shares. We can also see the earnings per share that have gone up quite significantly. They have multiplied their earnings per share many times, and they still don't distribute dividends. That's probably a sign because they think that by reinvesting the earnings that they generate can still generate a very good return for the investors by themselves. That is my outlook for PayPal. Hope you liked it. Make sure to like, subscribe, and comment which stocks you want me to analyze next. I'll answer all your comments, so make sure to do that. And the links of the databases that I use are in the description. So this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.